Hello, good morning. Welcome back to Likit Saga's Gas Diary. So, so we'll be discussing in this video how gas markets moved in the week which started on 1st June and ended on 5th June. Uh, so in this video is for informational and educational purposes only. I'm sharing my personal execution and trading logics from past week. I do not offer any financial advices or trade recommendations or market predictions or outlooks. Uh, Commodity trading comes with high level of risk because of the volatility associated with the commodity markets relative to the or stock markets. So you probably need to do your due diligence before taking any trades. Okay, coming back to the markets last week. Last week the markets have been, we could say, sideways, but it's highly volatile as markets continue to find some direction. So in this video I'll be speaking about fundamental analysis, technical analysis, which is the charts, and then I'll tell you how my execution strategy is for this week. Coming to the fundamental analysis, which speaks about supply and demand. This is the sheet which I created last week, and probably if you followed my videos, probably you will get to know that last week as well I showed you this one. So I have been filling this for the whole week, and if you look at the scores, and there is a score which arrives from all these six parameters I have allocated. So each score can go from -1 to +1, and then once so +1 is highly bullish for prices, -1 is highly bearish for prices. So if you look at the scores and the price movements, so on June I was zero point 0.5, which is I'm still bullish, but markets reacted bearishly. And then on 2nd June I was 0.25 bullish. Markets probably looks consolidating. And then on 3rd June there was significantly bullish, and markets probably seem recovering and posted gains. And 4th June, which is Thursday, I was still bullish and markets gained 3.8%. On 5th June, my score pointed to minus 0.25, which probably this time around it resulted in a significant price losses for natural gas, US natural gas, and resulted in 3.21% loss. Okay, take a look at each of these and how they have evolved over the week. Coming to the production, so by the start over the weekend, the production was high, 110.5 BCF, and then on Monday it started coming down, so 109.8, probably because of some maintenances, and then it has come down 109.1, and then 107.9. So probably at this point, till this point, yes, you can see higher production to lower production. That's the weekly turnaround till the midweek, and then probably around Friday it picked up. So as you can see, like, production fell. So probably what production falling is bullish for prices. So you have rating of 0.5 here, which is again showing that it's not significantly bullish, but it's still bullish. And over by the end of the week, the scores are 0 from production, because production seems to have picked up again. Okay, so that's for the production. Coming to the LNG, sorry, this one is the demand, lower 48 demand. So I would like to speak how the demand has evolved over the week. Probably I will just show you an Excel file which I have created this week, so that you get an idea how US demand has evolved over the week. So this one probably is the EC 15-day ensemble forecast, which is widely followed. And then on the top, each column represents a day, and then on the left hand side I have fixed so different ensemble runs. So each day that happens to be a forecast for the next 15 days. So we can see how these models have evolved over the week. As you can see, this one was on Wednesday. So this one is like rolling 12 day total. So As you can see on Wednesday, models were pointing to 136 cooling degree days. However, on Thursday they went higher. Thursday 12, 12 Thursday we have two runs, so 0 0 ensemble and then 12 ensemble. So but Thursday they went further high, but on Friday they have given away their gains. So the cooling degree days fell significantly, as you can see. So probably this must have been the trigger for the price fall on Friday. So but if you look at the total 7 days, so 7 days, 7 days like for the next 7 days, 12 days like for the next 12 days. So if you look at the next 7 days total like cooling degree days, so that has been going up and up. So what that tells you is that over the next 7 days the number of cooling requirements are going to be significantly higher. So that has been going high, but over the next 12 days that has fallen, which again means that after 7 days probably we're going to see significant reduction in cooling degree days. So that would bring the demand for gas down. So how the market has evolved. So market was probably initially from the start of by the start of the week, market was thinking maybe bearishly, but that because maybe there was not much heating demand. That's the market expectation by the start of the week. By the midweek, market is thinking probably next 15 days are going to be high demand, but by the end of the week, markets has come to now think that demand is going to be there for 1 week, and then demand's going to come down because the heating requirements are going to be lower. Probably I'll show it to you from graphical way. This is the same easy charts. This one is the latest forecast for next week, which starts from 8th June to 15th June, and this one is the week after, which starts from 15th June to 22nd June. Let's focus on the next week one. As you can see, 8th June to 15th June, there is a red heat map over the most of the regions in the east and over the Texas region, and then over the west coast as well, West Pacific coast as well. So what this again means is that so there is going to be a broad based demand. So what that means is that all the regions are going to experience heat. So which again means all the regions are going to need cooling demand, air conditioning, and then power demand, cooling demand at the same time. So that again means significant demand for gas for power generation. So that's the next week forecast. But immediately after that, as week progresses, probably we could see some significant cooling happening over here. So probably the winds from the south, so I guess the winds from the south are gonna go up. That's what I feel. And then this hard zone is gonna be moving towards east. So probably, however, the east is still gonna be above seasonal temperatures for the week after as well. So and the west coast, California and Los Angeles probably are going to see the heat and the rising air conditioning. But the Texas region, which has higher uh, probably higher data center demand, or so they're gonna be a bit below seasonal temps in the week after. So that's gonna reduce the demand. So probably week after, then probably there is compensation. So probably it's net zero. It's not bullish, it's not bearish, but for the next week, which is a week starting tomorrow, 8th June, so there's gonna be significantly higher heating demand. So coming to the next fundamental, let's move to the next fundamental, which is LNG demand. So LNG demand over the week, it has fallen over the first 2 days. That again is already factored in last week because of the sub and pass maintenances. As you can see, so NGPL and trial are the pipelines to the sub and pass. Sub and pass is the top LNG export plant in the US. So there was maintenances. So the feed gas volumes were low, which was notified on 29th May, which was Friday before last week. So it was already notified, but demand has come down. Maybe that was the reason for the price crash or the start of the week. Lower LNG feed gas volumes, but they have picked up over the as week progressed and settled around 16.6 BCF. So that probably has resulted in price going higher and then stabilizing over there. That's with regards to LNG demand. So this morning it's around 16.7 BCF, which is probably looks going higher as many LNG facilities come online. Coming to the Coming to the other data, which probably has inventory change. So on Thursday, inventory change has come is 95 BCF, which is lower than 99 BCF consensus. uh, so I gave a point 0.5 rating for a bullishness on Thursdays, and on Thursday probably market went already higher, but after this probably market just stabilized. It did not fall, but it stayed high. And then grass rigs were down by 1, so that for that I gave 0.25 rating, 0.25 bullish factor. Gas rigs seems to be falling, so a week before it has come down by 3, and now last week they have come down by 1. And geopolitical risk is probably on Friday. Oil markets crashed, but over the weekend there seems to be again some escalation going on. Sorry, this one. There seems to be escalation going on. So on Friday it was minus 0.25, so probably this could have contributed to the price fall as well. But over the weekend there are some escalations going on, like American forces shooting down Iranian ballistic missiles targeting Kuwait, Bahrain, and US forces shooting down Iranian drones in Strait of Hormuz. So probably there seems to be an escalation. So tomorrow this could contribute to some bullish action as well. Coming to That's with regards to the fundamental analysis. Now moving on to the technical analysis. Technical analysis, I would say, are mixed, maybe with slight bearish tilt, so just minus 0.25. Maybe I'm still maybe 0, I would say, 0.25 to 0 in between, but it's that's the 0 to 1 is what we need to rate, so I have given minus 0.25. Over the week, as week progressed as well, then in between there was some hammer signal, so which resulted in giving 1 rating for technical analysis. However, as the week progressed on Friday, we have seen a bearish engulfing pattern, so that is a bearish signal. However, it seems to be finding this one is another bearish signal. It seems to be finding resistance near 200-day simple moving average on daily charts. However, it's still taking support near that middle line in the channel, so probably we can. And then probably from the demand side, it remains to be seen, like whether the market is going to react to the short term demand, probably, which is going to happen this week. Probably I think so. I suspect so, because when the heat come, when everyone feels the heat, that's when the public participation is going to be there, and then probably that could pull the markets higher. That is with regards to my outlook for that's with regards to my that's my feeling for next week. Coming to the charts themselves, so I'll take you through the 4 charts. This is what Indian markets are showing, where US gas is traded in on MCX. It's already above the 200-day moving average and probably fluctuating around this. So probably as you can see, there is significant volumes taken around these levels, which again shows that once the market moves higher, once the market takes the direction and starts moving that direction, we could see a significant price move either upwards or downwards. That's with regards to Indian one. But when you look at the actual natural gas Henry Hub, which is traded on New York Stock Exchange and NYMEX. So if you look at this, so prices seems to be finding resistance around that 200-day SMA. What that means is that it has tried to cross it, but it couldn't. Failed once. It tried again on Thursday, and then Friday it failed again. So what this means is that uh, but from my perspective, it's a good thing for me, is that because I'm long, so markets did not fall away significantly. Markets are still trying. So what this means is that probably eventually once they are going to break this SMA 200 day moving average, and then prices could go significantly higher. So probably I'm expecting around at least 3.6 to 3.65 once this one is taken down. I'm expecting that to be taken down this week. Let's see what happens. But yeah, that's with regards to my outlook. But as I mentioned in the disclaimer, this is not a trading advice, but this is what I take my positions and my views. So coming to the next chart, so this one is the hourly chart, daily chart, and weekly chart. Weekly chart. So let's take a look at the daily charts themselves. So as you can see, this one is the start of the week. Markets crashed on hourly charts. Here you are looking at hourly charts. Markets crashed and then stabilized on Tuesday, and then it started going higher on Wednesday, and on Thursday they went significantly higher, and Friday they have gone back few gains. So if you look at this RSI, so RSI above 80, come down to 30, came down to 30, and again went down above 70, no, sorry, 70, 30, 70, 30 again. So what do you expect from next move? Again they are below below 30. RSI is below 30. Probably it could pick up, probably prices could rise, and then market, probably people would see that as hits their markets rising, so that could trigger a next bullish move, and probably I'm expecting a breakout from this price zone. 3.35 could be broken down next week decisively, and then prices could move higher. So let's look at the daily charts. So in daily charts, so there is some bearishness as well. As you can see, this one probably can be considered kind of evening star. Ideally this candle should have opened below this shooting star, so that, but it's not an ideal pattern, but it's what it is. And then you can see on Friday we have this engulfing pattern, which is again bearish signal, but this week fundamentals, I'm expecting prices to go higher. I'm not expecting prices to come down, but if it can come down, markets, you cannot be 100% sure, which is why you have minus 0.25 for technical analysis for start for the day starting Monday. Coming down to the weekly charts, it's not significantly lower as well. It's not minus 0.5, but that's again because if you look at weekly charts, it's bullish week, alternative bullish weeks, as you can see. So probably that again means that maybe next week you could again see a long bullish candle over the next week, possible. Looking at these patterns, maybe bullish, pass, bullish, pass, bullish, pass, bullish, maybe possible. Yeah, let's look at this one. So this one is again probably the same, but this one I have this MACD indicator again, bullish momentum picking up in MACD, and then RSI probably holding above 50, but probably next move could be a significantly bullish one, which would probably take RSI above 70, possible. Just like this, like significant moves over the next 4-5 days, all gains, and then probably RSI will be above 70, possible. Or maybe it could come down as well, never know. But yeah, this one is like could be the resistance, which is what I have arrived at 3.658. So this one is a Fibonacci retracement. So 0.236 is around 3.658, which where probably markets could find resistance. So that's with regards to technical analysis. And then as you know, probably the last couple of minutes I'm gonna speak about my positions. So as you know, probably if you have watched my last video, I was bullish over here, and then I have taken heavy long positions, but next couple of days I had to face the brunt of the markets were down 3.3%, and then here maybe you see 0.38%, but on that day markets were even down, like this was hammer. So probably I have seen the brunt of the markets of prices going down here as well. So which is when I had to cut my long positions, because in futures you deal with the leverages, probably you need to add money or you cut down positions, or else you risk losing entire of your positions. But the good news is that the market has come down up, but then again on Friday markets have come down again. So I hope markets open bullishly and continue to go higher next week, which is what my gut feeling and outlook is, based on all the fundamentals and technical analysis. But can happen opposite as well. But if it happens opposite, probably I need to cut down my positions more. Probably that would lead even more difficulty in making gains. So that's why probably when playing with leverages, as I said, you need to be very careful on how much position size you take. So that's with regards to this week's US gas outlooks. Thank you for watching this video. I'll see you in the next video next week. Thank you.